Yeah, kind of a flattish open, and for very good reason. We're at the stage of this whole thing where we're evaluating what the reopening is look like, and there's a lot of differences of opinion. Defensive today, that's the way I would call it. Just take a look at the markets. Banks have had a really good week. We were up about 5%, not really doing anything today. Energy, oil's topping out $38, $39, been there for a while, so that's not going into it. Semi's still strong. Great day yesterday. Healthcare, all right, and defensive consumer staples, okay. Mega cap stocks. You got a historic high in Apple. Everybody always loves that. And as Jim says, Amazon just keeps on chugging away there. So Apple and Amazon all at new highs. Again, Apple new historic high there. Amazon not a new high, but chugging along. Microsoft, Alphabet also on the upside. David mentioned the cruise lines all down. Norwegian extending their suspension, their voyages through the end of September there. Southwest now leaving those middle seats unsold through September. So that group is a little bit weak. If you look at the S&P, though, the broader markets, we're in a mini V right now. I mean, a V on the upside here. We have 4 up days after a couple of notable down days last week. There's our little V that I'm talking about on the right side here. So I guess the question is, where are we? And remember, we're betting on the pace of the recovery. It's the single most important thing that moves the markets. And remember what happened. February and March, we were in the shutdown fear stage. April, we were in the reopening, April and May, in the reopening hope stage. And now we're in the reopening evaluation. Where is it? How confident are companies in a sustained recovery? When are we going to see hiring? You heard Jim talking about that very eloquently. What I'm concerned about is we're not getting an earnings expansion. We're getting a multiple expansion. We're not seeing earnings expand, and the earnings cuts need to stop. Look at this, almost down 45% for the second quarter. That's been dropping now for a while. We need to stop that. We need to, less bad is what we need, and we need to see the earnings estimates start moving up. You can see the market is expecting a V recovery in earnings. Look at these numbers here for the first quarter of 2021 and second quarter 2021, because you have easy comps. So this is sort of a V expectation in earnings, but these numbers are still coming down. They have to stop that. We need some companies coming forth in the next month or so saying, guys, we have better visibility, and maybe that'll happen. I don't know. We're not seeing it right now. Elsewhere, just want to let you know the NYSE is continuing that partial reopening here. Some of the designated market makers are coming back this week. They're not going to require people to avoid public transportation. Of course, they're still requiring that indemnification agreement to be signed. That's a little bit controversial. They're still doing temperature checks at the door. We'll chat with the head there of the NYSE, Stacey Cunningham, a little after 11 o'clock. Get an update from her. Finally, just want to note, Jay Clayton's coming on. We'll be talking with him at 10:30 Eastern time. We'll be talking about the SEC's role in bridging the economic inequality gap. What role does the SEC have in helping on that front? And also that frenzy of retail trading we've seen recently. What does Jay Clayton think about that? And what, if anything, is the SEC doing to help protect those kinds of investors? Jay Clayton, head of the SEC at 10:30 Eastern time with us. David, back to you.